welcome everybody. I think everyone has been admitted to another edition of Community Capital Live. Really grateful and excited to get to have you all on the call today, and really excited to talk about today's fund, the Fair Finance Fund. We're going to be talking with Justin Abbiss. Am I saying your name right, Justin?
Close, Abbas, but yeah,
Abbas. All
that's
right.
fine.
I like that. That's easier, honestly. So I like that. I'm excited to get in. It looks like their model has had some, they've had a lot of success and are doing some really interesting things. Community Capital Live here is a collaboration of several different groups, all focused on solidarity economics, local investing, social impact investing. We really kind of cover a wide range of things here, but we're all interested in the same world. And so the partners that I want to make sure we point out in our panel today, first, the partner, the Main Street Journal, which is really the place to go for understanding what local investing is, how it works, and how you can actually invest in your local community rather than in Wall Street. It's the place to go for that. We also are partnered with Neighborhood Economics, which really is the place to meet people in this world that you want to meet, whether they're social entrepreneurs, social investors, whether they are funds, whether they are people doing the boots on the groundwork. Neighborhood Economics is really the conference where all those people come together. Their next one coming up is at the end of September here, just in a couple of weeks. So if you have not registered for that, make sure to go to neighborhoodeconomics.org and get yourself to lovely Chicago in September. It's a beautiful time of year to be in Chicago. The next organization I want to make sure we mention is Impact Alpha, who is really the place to go to learn about impact investing, what those opportunities are, how that world works, whether it's local or across the globe. Impact Alpha. And if you go to their podcast page, you'll see us along with several other podcasts on a variety of impact investing topics. Also, my show, The Mindful Marketplace, which was on Biz Radio US about social enterprise, democratic ownership, and community investing business models. You can go to mindfulmarketplaceshow.com to see past episodes of the show that we had there. I also want to make sure we introduce our panel for today. So I am excited to be joined by Michael Schuman, who is not only the editor-in-chief of the aforementioned Main Street Journal, he is also the author of several books on local investing. Really is kind of the place where I started learning a lot about this topic back when I read Local Dollars, Local Cents. But he has a newer one out that is more up to date, called "Put Your Money Where Your Life Is," which is also great. So make sure you get a copy of that. I also want to make sure that we get introduced here, Nicole, and your last name's not on yours, so I'm sorry, Nicole. I forget.
Nicole
Vitello.
Vitello, close
Vitello.
close enough.
I
Yeah,
was
that was a trap. Don't
Vit
worry,
I
Joey.
I
Fell
was
right
trying to
in.
make it more Italian than it was. I was like Vitello. Um,
Syllables always help.
Yeah, from the super inspirational and incredible organization Equal Exchange, really one of the first companies that I ever heard about that was doing things in a more conscious way and kind of opened my eyes to a lot of possibilities. So excited to have Nicole on the panel here as well. So Justin, let's get started. I would love to hear about kind of what was the reason that the Fair Finance Fund originally came together, and what's been kind of your overarching story from that moment till today?
Yeah, well, thanks, Joel, and thanks for having me on this show. I'm very honored and yeah, looking forward to getting into this discussion. So the Fair Finance Fund started back in 2019, 2020, and its sole purpose was to fill a gap in the food and beverage and food and agricultural small scale sector in Ontario, and specifically in regards to financing. So there was a well-known gap through my predecessor's work that many of these sustainably focused social enterprises were having a really hard time accessing funding, and so that was really the impetus for starting the fund back in 2019.
Yeah, that's great. So was this food desert issues that you guys were dealing with? I know that was what I was working on a lot in Detroit. Or is this, you're saying it's more this is a funding issue for farmers or for local grocers, or what was, yeah.
Yeah, a little bit of everything. So our portfolio, the type of applicants and clients that we work with are everything from small scale farmers, think regenerative farming, folks that are really focused on soil health and organic methods, um, to local grocers, to small scale breweries with a sustainable and social lens. So we really do fill the entire sort of food supply chain. But we do focus a little bit more on the small scale agriculture. And yeah, to your point, Joel, like the issue that we still see ongoing today, and the problem that we're trying to solve for is not only are these entrepreneurs underfunded, digging deeper, there's a demographic in there that really wants to get into this industry that are systemically underrepresented from a financing standpoint, and that's what the fund is ongoing, like trying to solve for.
Yeah. I know we'll get into the fund itself and all the money parts of it and kind of the growth and all that, but I'm curious from your perspective on the impact side of things. What was the initial impact that the fund that you guys started seeing at Fair Finance Fund when this started being implemented, and how has that grown to today?
Yeah, I think maybe I'll answer that first with a quick story. So I came to the fund as a client, and so
Mm.
I have a background in social enterprises with a food hub based out of Hamilton, Ontario. We've run that for about 10 years, and during the pandemic, we saw a lot of demand for our services. We tried to use that momentum and that demand to grow the business and open new locations. And so when I was introduced to the fund back in 2020, 2021, it was through the eyes of an application. And what really spoke to me about the fund, in particular at the time, the executive director, her name is Sally Miller, was that the team was focused, not only were experts in the food industry, came from a farming or came from a sustainable food background. So when I spoke to them, they understood the business and they understood the problems that we're trying to solve for, but also the actual problems that we face day to day. And I think that that's the really impactful thing that resonated with me, is that they understand that what makes a food business tick and the problems that we have, whether that be on the financial side or on the operational side, um, and you're speaking to a real human, not a large financial institution. So for me as an entrepreneur at that time, that's what really resonated with me, and that's why I worked with the fund. And fast forwarding today in my role, that's my favorite part of the role, is working with our clients and being able to understand like their background, understanding the problems that they're facing, whether that be cash flow or operational, and being able to really resonate with them when we're talking about the business. And I think that's kind of our secret sauce at the Fair Finance Fund.
Yeah, I also, I guess to kind of start transitioning towards the fund, the first thing that I wanted to point out that looked unique, that I was seeing or kind of interesting to me, and then I want to let kind of Michael and Nicole kind of run with things from here, is this community bond. I was curious if you could kind of just sort of explain what that is and how that contributes and how that allows people to invest locally there.
Yeah, yeah. So the community bond, the great thing about it is it's very approachable. We've designed it that way so that anyone from a retail small scale investor to larger foundations or institutions can invest in the fund. And so the way it traditionally looks is we offer two sort of tiers. The first tier is a $5,000 bond, and the second tier is a $50,000 bond. And then investors, people want to get involved, can choose how many of those bonds they want to buy, so they can stack them. And traditionally, we offer 5-year terms at modest interest rates, but we find that most of the people coming to invest in the fund are values aligned and looking for their impact rather than strictly ROI. And so on the flip side, we're able to raise capital on a lower percentage, more affordable capital. And so then we're able to extend our lending rates to our entrepreneurs at much more reasonable rates and transparent rates that allow them to actually have a thriving business.
Yeah, Michael, I'd love to turn it over to you now. I know I got other questions I could ask, but I think you do it better.
Well, let's drill down into the fund generally, and then we'll look at the people who are the beneficiaries, and then we'll look at the investors and just kind of just to understand some of the details around that. So first on the fund overall, how large is the fund and who have been the main contributors of capital to it?
Yeah, so the fund to date is approaching about 4.8, 4.9 in assets under management. So we're still, rather small, but growing. We have big ambitions and desires to grow that over in the coming years. And traditionally, most of the capital has actually been a reasonable split between individual investors, community foundations, and then larger institutional foundations, and almost like a pretty even 30-30-30 split. So in the early days, were able to tap into some catalytic funding to help kickstart the fund. And that came from some government sources, but otherwise it's been all investor-based capital that's flowed into the fund. And some of the early investors came in with rather large investments in long 10-year terms. So patient capital at 0%. And that's really been able to help us scale the fund and grow our investor base.
And how difficult or expensive was it to set it up under the Ontario securities laws?
I can't speak directly to the time when it was set up, Michael, because it was before my time. But I mean, there's actually quite a few funds now in Ontario that are starting, and I think are starting on like modeled sort of similar to the Fair Finance Fund, and are starting on reasonable budgets of a couple $100,000 in grant funding to help support operations and get up and running before they actually start bringing in further capital.
So is this smooth glide path that you are set up as a nonprofit, and that gives you, the securities regulators give you a buy on that?
Exactly. Yeah, non-for-profits are able to issue community bonds with the prospectus,
Right.
with not the same level of scrutiny from the securities.
So if we turn to the beneficiaries, how many businesses have you been able to help, and what kind of categories do they fall into?
Yeah, so I think we're just about to hit close to 80 clients altogether now since the inception of the fund. And our sort of average loan size is sort of in the $80,000 to $100,000 range. So that's kind of gives you an idea of the size of businesses that we're supporting. And then in terms of the sector, about 56% of our portfolio is small scale agriculture. So you can think like, the small 1 to 4 acre, 5 acre farms, family run farms that really have a focus on regenerative farming practices, and are selling their produce in local markets, local retailers, local restaurants. And then moving further along the supply chain, our clients range from honey apiaries to sustainable wineries to breweries to small scale grocers. And then, a smaller section of food producers or sort of food and beverage, but we do have some representation there as well.
Right. So pretty wide diversity of food businesses. And do you find that since they all exist, it sounds like you're not focused so much on startups, do they require technical assistance for you to feel comfortable in giving the loan?
Yeah. So a few thoughts on that. So our loan review process is done by a subcommittee. So we call it, in our case, we call it the loan review committee. And they're made up of industry experts. They're volunteers. They volunteer their time at the fund. So we have a team that sort of helps our applicants along with their application. And then at the time for review, we take the application to our loan review committee. And it's sort of a consensus approach to decision making. We use a sort of structured matrix to make our decisions. And to answer your question about support and gathering the information that we need to get them sort of investment ready, it kind of ranges. We do get some startups, and we aren't always in a position to support as many startups as maybe we would like to. And it ranges from, people that are quite ready and business savvy and have done this before to other applicants who need a little bit more of hand holding and support during sort of the application process. So, and two more things on that. So we do have a pool of mentors, again, that are experts in the industry, have a background in food and farming. And then they have sort of more expertise in things like marketing or operations or financial planning, cash flow projections. So we're able to tap into those mentors to help either through the application process or after when they become approved, we're able to provide up to 10 hours of mentorship for our loan clients. So free of charge, that comes as part of the service that we provide. And then, I think, Michael, that question really hit something that we're really trying to focus on is building capacity across not just Ontario, but the country to help support small scale agricultural farmers become investment ready. So we're actually in the process of launching another program called Ready to Grow, and it's a financial literacy sort of accelerator geared a little bit more towards farmers, but open to sort of food and beverage and other food entrepreneurs. And the idea is that it would be free of charge, and anywhere from sort of 2 to 3 months in length. And the goal coming out of it is for these applicants to be investment ready, whether that's with us or another institution, but to raise the financial literacy capacity in the industry.
Great. So let me ask one more question here and then turn it over to Nicole. So is this model financially viable? That is, are you raising capital in part to pay salaries and administration? And if you are, is there a scale that you imagine growing to where that no longer becomes necessary?
Well, yeah, you nailed my main goal for the next couple of years. So where we're at right now at sort of 4.7, 4.8 million assets under management, we're able to cover our operational expenses and some of our financing expenses sort of sustainably, so cash flowing evenly. We do need to scale sort of to the 7, 8, 9 million assets under management, where I think we'll be much more in a position to really be sustainable. And so there's economies of scale with everything. And in our case, we think that's sort of the goal that we're aiming for. Yeah, so we are able to raise not capital to pay operational expenses, but grant funding to help offset any shortfalls that we may have. But we're getting pretty close.
Great. And it's I always have to remind myself what the exchange rate is between the $2, and 4.8 million sounds like a lot, but in US dollar terms, what we almost have to divide it by 2 now.
That's depressing.
It's changing. It's changing. We're working overtime to depreciate our dollar, which will be helpful for you. All right, Nicole, over to you.
Well, Michael stole all my good questions. Just kidding. I guess for me, the question that resonated with me was, yeah, how replicable is this model, and how, maybe giving the audience a sense of, you know, how this particular fund in Ontario, like you're obviously thinking about expanding it across Canada. What do you think some of the challenges will be? Is it that Ontario has a particular focus on small scale farms, and so this model works there, and maybe there are other industries in other provinces that make more sense for this? I mean, this is a community capital focus, so we try to, you know, spell that out for people so we can see like what pieces of this fund may work versus pieces of others.
Yeah, that's a great question, Nicole. And I think something that we're still sort of evolving in our within our team and sort of at the board level of where does it make sense for Fair Finance Fund in Canada? Where what other sort of geographics? And I mean, in one place that we are looking at is BC, because we do feel like it's got a similar small scale food scene, particularly in the interior, but also in the lower mainland area there. And so we do think that the model could work well there. And then I guess the challenges about trying to grow is if you're like put the risk, I think trying to grow too fast and grow into too many different markets is a risk. So we're being very thoughtful with how we're going to roll out, and sort of trying to get some boots on the ground, work with other organizations that are already in those jurisdictions to understand what are the problems there, and what does our product make sense? Are there other products that we could present that would make more sense? In the case of like Atlantic Canada, is there like a quota financing kind of option, or for small scale farmers in interior BC, is there like more interest only kind of financing that makes sense for interest only during the winter season? So those are the type of things that we're sort of talking about right now, and getting some real-time feedback from partners and actual businesses across Canada right now.
And it sounds like your model, I really like the model of having, the community investment goes both ways, right? You have your mention of local entrepreneurs, farmers, business people volunteering time to be connected to this fund, as well as, investors who you're going to need that might be more place-based versus, thinking broadly across Canada. I think that makes a lot of sense. The thinking deliberately about where you want to be and how you can build this through those levels. Mm-hmm. The next question I generally try to ask is like, what's the riskiest investment you've made? And like, how did that go? Or like, people are always like, let me tell you about the best thing that happened. I'm like, I want to know about the hardest thing that happened and how how that went, and not to call anybody out, but just to use that as an example of maybe folks can learn from some steps along the way. So risk factors, how do you think about that?
Yeah. So we have this discussion almost daily at the fund. It's obviously one of the core issues that you're always trying to balance, balancing the mandate of supporting entrepreneurs that are maybe the banks view as unlendable or less interested in supporting. So we're trying to fill that gap, and that means we do need to make slightly riskier investments, and that's our mandate, that's our goal. And so how do we balance that? So one way that we're looking to balance that is to do more outbound marketing at the fund level. So actually go out and look for established businesses that still have those same mandates, so social, environmental impact lenses, and are operating in that way, but trying to bolster the fund so that we can still make those slightly riskier investments and balance the portfolio that way.
I had a question about one was about, I'm seeing that you guys are kind of, you mentioned this being more patient capital with the community bonds, and that's obviously reflected in the interest rates there. So it's like, Kevin, I feel like when he's not here, someone has to make sure someone says it, is that there's a cost to doing good. And so, I think we see that reflected in that there does need to be some sort of sacrifice if we're truly going to be impactful with the money. So my question then is, are those that lower interest rate, is that how is that passed on to the business, to the entrepreneurs or the businesses that you guys work with?
Yeah. So we raise capital on the community bond side, and that those rates range anywhere from 0%. So, and we actually leave it open to the investor to choose. We allow anywhere from 0 to 3%. So we're able to raise capital with kind of a median of sort of 2.5% on the capital raise side, and then although it's starting to move closer to 3, I will say, and then we're deploying our loans at 7.5% to our entrepreneurs, which still feels very fair and approachable for most entrepreneurs, particularly if you go to get a loan with a traditional financial institution. It seems like pretty competitive, and then we're able to sort of sustain our operations on that spread in between. Did that answer your question, Joel?
Yeah, you did. I just I know there's not a, but that makes sense to me that so when you guys are going to do a kind of a capital raise or a pull, there's input from the partners that you have to kind of, because the more attractive it's going to be to investors, the more capital you might be able to get for that enterprise, but also the more of an interest rate they would have to pay back at the same time. Am I understanding that right?
Well, the more interest rate that yeah. So if the higher we raise our capital, the higher we have to pass that on to our
Right.
entrepreneurs. Yeah.
Yeah.
And from our experience, some investors want to choose 0 or 1%, and some investors want.
How would you know if you're on mute?
Yeah. I was also curious if you guys, I know you said it's still at a small scale, so you might not have seen this, or if you anticipate as you grow the fund, any sort of pushback from or difficult entanglements maybe with the food industry and the food sort of system that exists already on the higher level. Like, just curious if you guys have run into anything that you've had to work through there.
You mean in regards to like just more recent things like tariffs? Is that kind of where you're getting at?
No, I mean maybe. I just mean, like, I know that there's a food industry already in place, and I'm just curious if you guys, by doing things a little differently, if you're seeing any sort of ways like how you might guard against pushback from the industry that would prefer to gobble up all that business that you guys are making more local, more sustainable. Yeah.
I see. Yeah. I my gut tells me is that we're not even on their radar right now. Bit of a drop in the bucket, so to speak. Yeah, the nice thing about my previous work is I have a lot of colleagues who are entrepreneurs in the industry, and so I'm able to chat with them about, where are they accessing their funding, and how are they growing their businesses. And yeah, I think compared to the big banks in Canada, we have obviously a monopolization of our financial sector, and there's really 5 main players, and I don't think they even know about us yet. So we got a ways to go yet.
For sure. Jen wanted to ask if you could talk more about the inclusive prosperity. Yeah, I noticed that on the website too. It looks like you guys have a sub agency that's doing that. I would love to hear about that too.
Yeah. Inclusive prosperity is really exciting. So it's an umbrella affiliate organization of Fair Finance Funds. And it was born in Fair Finance Fund, but it's already going out into the wild on its own as we speak. And they are focused on supporting BIPOC farmers across Canada. So there's actually 2 funds within Inclusive Prosperity. One is called the African Canadian Farmers Fund, and that's a really unique model that, as far as we know, hasn't been done in North America yet. And it's a rent-to-own land ownership model. So the idea is African Canadian farmers can apply for the fund. They've got a piece of land that they're looking to acquire. The fund goes out and buys the land, and then through a sort of predetermined amount of years, anywhere sort of from 5 to 10 years, the farmer is able to rent it from the fund. all the while building equity into the land. And then at the end of the relationship, the idea is that they're able to then go and secure traditional financing and a long-term mortgage on that land and acquire their own land, which we all know is sort of the biggest hurdle for a lot of farmers, especially as land values keep rising at an alarming rate. And then the other fund is called the Nourish Fund, and it's a micro urban farming fund. And the idea is trying to support small scale agriculture in multi-use lands. So right now there's a pilot going on in Scarborough. And the idea is that they'll be able to scale that to various cities across Canada. So those loans range anywhere from sort of $1,000 to $2,000 on the very low end to sort of $20,000 on the high end.
Have any of the loans gone out to food businesses that are kind of more supporting the food infrastructure, like markets or kind of distribution network, like transportation of local food or anything like that? Or is it? I'm just curious, kind of what all that. Are you guys working to sort of help create a whole ecosystem with the fund, or is it just sort of you guys are looking at what comes up to you and kind of just moving forward with what's available there?
Yeah, so historically, I think the fund's been able to do mostly have sort of inbound
Hmm.
inquiries. Now, as I kind of alluded to earlier, we are looking to be a little bit more outbound in our nature, all while trying to support everyone that's coming to us as best as we can. But to answer your question about sort of the food distribution, yeah, we've supported a few sort of small grocery stores or food hubs over the years. My previous organization is actually one of them. It's a B Corp certified food hub located in Hamilton. We've supported at the time a rather large sustainably focused grocery chain in Toronto. They've unfortunately, part of their business has closed down. They still have some of it. And then there's been a few other sort of small scale food hubs in various places across Ontario that we've supported.
Awesome. Well, I want to open it up. If anyone here has any questions for Justin, go ahead and put them in just raise your hand even in the yeah. Linda, are you raising there? Yeah, go ahead. You can just unmute and
Hi, Justin. Nice to see you. I'm kind of thinking that we need to look at your model. Sally helped to use some of FarmWorks in order to start initially, but now looking at difficulties as we've passed the 6 million, or we're about to pass the 6 million, and it's getting more and more difficult to work with securities. And having had part of that conversation with you, I'm wondering about looking at community bonds as an option for us as well. My question though is, are you finding it more or less difficult as time goes on to recruit the investors?
To raise capital, Linda?
Yeah.
Yeah. Well, first, it's really nice to see you, and yeah, you still owe me a coffee date, so we should do that. Yeah, I mean, I guess, Linda, you know the history of the fund, and I'm still kind of new blood at the fund, so I don't know if my perspective is fully developed yet, but we're focusing this year at least more so on trying to work with a lot of community foundations, especially as we start to look outside of Ontario and really work with the community foundations, not only to raise the capital, but also to help find clients, find people who need access to funding, because these foundations are very rooted in their local communities, and they want to see their investment dollars, at least some of it, stay in their communities. So that's one of our sort of strategic moves, is to really work with community foundations, and we're actually trying to bring a whole cohort of them together to help us do a larger multi-year raise. So that's our big kind of strategy moving forward, is is to stop looking at sort of individual years raising and look at multi-year, 3, 5, maybe even 10-year kind of strategies, so that we can get those in place, and then we can focus really on the important work, which is supporting the clients and fostering food economies. I don't know if that helps, but
Yeah, thank you. Yeah. We're about to start our 15th offer, and I'll also be talking to you about Connections 2025 at Acadia in the middle of November.
oh, that sounds great.
I'll mention that to you too, Michael.
Congratulations on your 15th offering. That's
Thank you.
very impressive.
Can I just, Linda, since you raised your questions from a Nova Scotia perspective, one of the things that has helped you in Nova Scotia has been tax credits for people who put money into the fund. And Justin, do you have the benefit of any tax credits for people who invest?
Not currently, although there's a whole cohort of social finance intermediaries in Ontario that are currently lobbying the Ontario government to help make that a reality. So at the moment, Michael, no, but we're hoping that we can make some momentum there.
And let me squeeze in another question here. So obviously we're in the midst of trying to sort out how the mad tariff war is affecting our economies, our farm economies. Do you see a change in the demand structure for your services since the tariff chaos has begun?
Yeah, we, especially back in February, when the tariff war really kind of kicked off and had a lot of, I don't know, momentum is the right word, but was sort of at the front of everyone's minds. And not that it's been removed, but certainly not in the headlines every day. We saw a huge surge of requests for financing back in sort of February, March, and I think we've had this year will be our biggest request for funding and probably our biggest capital deployment as well. And so, we attribute a lot of that to the sort of roll up your sleeve kind of attitude that we see Canadians having towards and supporting made in Canada kind of solutions. I wouldn't say it's the same kind of demand that we saw probably during COVID for local food. And I'm sure Linda could probably speak to that a little bit more than I could, or I can. But it definitely it felt it reminded me of that time, and I was in the thick of it during COVID in the local food scene, and the demand was just unprecedented. We'll probably never quite see that again.
I think that leads me to a question I was trying to figure out how to insert here. So I guess I'm wondering, so as somebody who was a former farmer for 10 years on a small scale here in Rhode Island and was never able to even get close to equity or land purchase, or, I just was not able to make the business viable over time and had to leave the farm business, which I think was a successful operation in a lot of ways, but the capital was a problem. So I'm wondering if through this program, you talked about the incubator program that, the rent to own that allows you to build equity, which is exactly what someone like I myself needed at that time, right? Because then you're more marketable to traditional lender because you have equity already in the business. So that's balancing. I mean, you still have the overhead and how to think about, mortgages and other things on a farming budget. However, I'm wondering, there is community support. You've mentioned it, particularly, Canadian support for Canadian small farmers and local business. Have you seen in your experience farms in particular be able to access local investment more? I'm thinking like FSA model, but for investment, not prepaying your vegetable share, but actually be investing patiently as an addition to something, to a fund like this. Your funds are limited. The community is there. Farms often have a connection with local people. Is the fund designed to be a facilitator of that and actually protect the farmer? Or is there another model that could be an add-on where you have people investing directly in these farms? Is that just too risky? Is there no mechanism for that? I'm sort of asking a out there question, but if we're trying to get to this point, there's still an intermediary now between the community and the farmer. I don't know. Is there something more creative that could come out of that?
So just to sort of try to pinpoint on the question, Nicole, is it you're asking, is there a way to sort of, if I'm an investor and I want to invest in a certain farm, is there a way to is there a tool to ensure that my dollars go towards that project versus another project?
I think it's more as we think about finance, community finance models, is the fact that the fund, so you use this rent to own model as an idea of how to access traditional funding. Is there a way to use this model to sort of buttress the risk for an individual investor, or is it all just supposed to go through the fund, right? I don't want to recreate the wheel here, but these are all different mechanisms. We're trying to park money in all these different places versus at Equal Exchange, we try to think about how direct can you make this to do, all these intermediaries playing a necessary role for protection, for facilitation, for training, for technical support, or is there actually some other method that could bolt on to this? I don't mean to hijack this session with this question, but it's sort of like, are we evolving at all? And maybe Linda is unmuted and has thoughts on this. I'd love to hear. I think this is a particular special place that you have there. So I can't replicate this in the US, maybe in Maine or a couple small examples, but it'd be great to hear.
Yeah, that's a great question. I'm still trying to not wrap my head around, but think of a good response, to be honest. I know one thing I will say is we are considering the idea of at the fund, the FFF fund, so inclusive prosperity aside, to look at lending on land and land ownership and helping. So basically kind of take the inclusive prosperity idea, but make it one of the products of FFF. The other thing that and I'm sure Linda wants to say something, so I'll be quick here, but the other thing that I want to mention, Nicole, it's not exactly what you're suggesting, but there are some new social finance intermediaries that are doing sort of a more direct peer-to-peer kind of model, and maybe you know them already. One of them that comes to mind is GoParity, GoParity.ca. They came from Europe and had a lot of background in sort of energy projects, but now they're got a Canadian chapter, if that's the right term, and they are actually making an establishment here in Atlantic, Canada, as well as on the West Coast. So I'd encourage you to check them out because it's really interesting what they're doing. And so you can kind of have these GoParity dollars and you can put money into different projects as you want. It's kind of got the, have you ever heard of kiva.org?
Yes, yes.
That model. Yeah. Anyways, Linda, did you want to jump in?
Well, there are a number of considerations. For one thing, in the States, you have Intervale in Vermont, where people can go to learn some of the challenges and see what works for them. As of tomorrow night, I'll probably be able to send you some information, or shortly after that, because as it happens, right here near where I live tomorrow, there's a session on land trusts. We do have a Annapolis Valley Land Trust that hasn't invested in a lot of land yet, but that's set up in such a way that it gives tax credit to farmers, upfront tax credit for putting their land into a trust. Dr. Wayne Caldwell, if you check on his work, has done quite a bit of work with land trusts. there's some counterindications with regard to leasing land and so on, and I'm sure you're well aware of that. But when I asked Justin about grants, we're thinking that, boy, it would be wonderful if FarmWorks, rather than a big corporation, could buy some of the land. And here in the Annapolis Valley, for example, a lot of the best land is being bought up by the much larger farmers and being held for their purposes rather than being available to people like yourself, Nicole. So we are in need of a mechanism to ensure that people who are interested in farming the land can do so. And I think some of the things that have been funded by slow money may fit into that category as well. So there's a huge demand, and certainly here in Nova Scotia, and across Canada, but particularly in Nova Scotia, we've lost so many farmers, and we really need to ensure that young farmers coming along have the opportunity to get onto the land and to be able to grow from there, and maybe over time buy the land that they have, put it into a trust like the SILT program in Iowa, and put a long-term lease in place and allow people to go from there.
I appreciate that. Yeah, it's always a challenge to think about equity versus, that's what farmers have often, is their land is their equity, and then they're forced to sell it later to turn it into something they can live on, literally. So I hear you. These mechanisms, I feel like we have to keep challenging different ways to get young people farming and to protect the farmland that we have, and find mechanisms. But it ties up a lot of capital, even for these funds. Real estate is a huge investment long term. And so now you don't have that capital for entrepreneurs or other projects that seem more modest and suited. The scale, I really like, Justin, that you've introduced here, right? 80 recipients with a pretty modest fund, and deploying capital at, $80,000 to $100,000 for these businesses is very manageable. It feels, but it's also going to be limited if you're trying to think about land or something that is just going to tie up a lot. So it's designed, I guess, to be that way. And so I keep thinking about other ways for community investment to help offset that. I think Michael's always very good about crowdfunding and other things, and saying it's overregulated. I don't mean to put words in your mouth, Michael, but like, people in the community can afford to lose $100, $500, whatever it is, to try to actually get something happening. Is there a way to do that without all the onerous fees associated with that? It just seems like there's a lot of profiting off of these ventures. And so I try to think about ways that can be more self-sustaining. So thank you for hearing my personal side of that. I'll keep fighting for that.
This is backwards, of course, but it's a book about the cooperative movement in Nova Scotia. And I came across this line from Dr. Moses Cody from way back when. He said, "You simply take that extra money you have and let your neighbor use it for a while, only you don't demand his right arm for security. It just makes sense."
Yeah.
Love
Yeah.
that.
And I mean, the movement of immigrants across the Midwest, it was like, oh, your farm's up for foreclosure, I'm going to buy it for $1 and give it back to you. Like, that's where mutual aid came out of community. I'd like to see it get back there. So that's very inspiring. And Nova Scotia is a very inspiring place.
Yeah, it's like
come visit.
Absolutely. I'm over.
Can
I would love
I
to.
introduce, just squeeze in our last couple minutes, one other topic?
Yeah.
And this is mostly for Justin, but Linda, I'd be interested in your view as well. So, I've been very focused on use of self-directed IRAs and solo 401ks in the United States to help convince people to move some of their tax-deferred saving into projects like yours. You've got similar programs in Canada, like a self-directed RRSP. Is there any pathway that you've been able to create to make that easier and a larger factor in the investments coming into your fund?
We do.
Yeah, I was going to say Linda can. We currently can't, based on our corporation structure. And then that I mentioned the cohort of social intermediaries that are trying to change that in Ontario.
Yeah.
But Linda, in Nova Scotia, they can. Yeah.
Yeah, we have access,
Mm.
and this is why, as you know, we've been it's been recommended at the Sustainable Finance Forum, for example, 2 years in a row, that every province in Nova Scotia, every province in Canada, have the community, a seat of the Community Economic Development Investment Fund, because that's a way for government to put money back into the places it needs to go. In our case, food. And so we have that 35, 20, and 10% tax credit that our investors get. And interestingly, Justin, a number of them want to know what the dividend is that they're getting on top of that. So those are not the people that we really encourage. But the other thing is about 40% of our investors put their money into an RSP. The one thing that we're missing at this point is at age 71, we have not found yet a fund or a bank that will hold the RIF, the age 71 retirement funds, and we're looking to be able to do that. But there's that huge amount of money, and there's an organization, the Canadian Workers Cooperative Federation, that manages all that money. So when people invest in FarmWorks, we then that money goes directly into our bank, into FarmWorks bank account. And so there's a huge amount of money that's sitting in our RSPs. I think in 3 years ago was over $1 billion that went into RSPs just in Nova Scotia. So we just tap into a very small amount of that. But what a wonderful way for government to allow communities and sectors such as agriculture to invest in themselves, because they're the ones who know what's happening on the ground and can make the best possible decisions with regard to how that money is allocated. So I certainly, if there are opportunities elsewhere for government to participate in that way, then I think it's a really important, but there's a really important potential.
Yeah, Nova Scotia is leading the way in Canada. I think C-diffs are only a thing in Nova Scotia. Is that right, Linda?
There's a 4-year 50% in New Brunswick hasn't worked very well, because what business gets off the ground and can repay investors in 4 years? There's a program, and I'm not sure what the parameters are in PEI. Manitoba has the legislation, and they really haven't made much use of it. So there needs to be a champion. And here in Nova Scotia, we initially had a champion who started the program, got the program off the ground, and traveled around Canada and spoke about it. Unfortunately, now I seem to be the person who gets most of those calls from people who are interested in the program.
I will say that the study that you folks did in Nova Scotia, sort of looking at what is the job output that you've gotten from the money that the province lost from tax revenues because of the tax credit, and it works out to like $500 a job, is an astonishing study. And I'm guessing, Justin, that even if there's not a tax credit, that doing like some kind of study that shows like, okay, here are the jobs that we produced, and we did this with no government funding. Like a little bit of government funding could generate this much in additional jobs for this cost. I just feel like there is a powerful argument here for your expansion that some good data could help.
That's a brilliant idea. We do have some of those numbers, and we publish them in our impact report on an annual basis, and we're able to show, you know, your investment of X is able to produce X jobs and Y local economic activity. And so, yeah, I think those are really powerful tools when we're talking to stakeholders and investors.
And I think the other thing that's powerful too, and we hear this from many of the funds that we talk with, is the willingness, in fact, the preference of your investors to not get focused and tripped up on, you know, whether it's a 5% or a 4% rate of return, but really focused on the social rate of return. Because I feel like this is the Achilles heel of the impact investment community. And we've got to expose it and turn that into a strength of what we're offering.
Agreed. I completely agree. We need to flip it on its head and lead first with the social and economic, social and environmental and economic benefits of investing in small scale, in this case, small scale agriculture and food businesses. But whatever the might be.
But also brilliant that you give people a choice. Like you're like 0 to 3, you choose, right? And everyone always thinks, oh, everyone will be 3. And you're like, no, actually, it probably breaks out pretty evenly between people that are like, I can 0, 1, 2, 3. I mean, that's a really nice model, because I think sometimes when you're making that decision for people, you know, there's always a little bit of like, I don't know, the choice is engagement. And I think that's smart, as well as pairing maybe some more established businesses that can have a better return with startups. I mean, that's a nice concept too, for an equal exchange tries to do that wherever we can, to offset people that may be at a place we were 40 years ago. So it's an important thing to link.
One of the other things that we do on an annual basis is at the time of interest payout to our investors, we offer an opportunity just to forfeit. So if they even are at 3% on one out of their 5 years, they can opt to donate it back to the fund. And one of my goals and our team's goals is to eventually get the fund to a place where we can start offering blended finance solutions for our clients. So coupling capital debt, but with grants as well. And I think the great story you can tell at that point is, well, if your donation won't be going to cover our salaries, they'll be going towards this awesome grant program that we have that supports our entrepreneurs. And I think that will be really powerful when we can get to that level.
All right, back to you, Joel.
Well, I love this. I learned a lot. Really grateful for what you guys have been doing, Justin. Really glad to see, as someone who kind of came to social enterprise through the food desert, world. I really love seeing the infrastructure that you guys are building, because there's a lot of people that we have actually here in Asheville who are working to try to do some of these same things specifically around food. I think there's something very rooted and intrinsic in an understanding of food system that helps you understand local economies in general. And so, yeah, I love seeing what you guys are doing. And next time we will be back. Aren't we doing? We're doing like it's different coming up. Aren't we doing like 2 in a row? Jen,
Yeah,
what's our
we're
schedule
back
like?
to back. We're
Yeah.
not getting enough. So
Yeah.
next Wednesday, same time at 2:00 Eastern, we will be interviewing Wilson Lester from Partners in Equity, and he's actually going to be part of Neighborhood Economics Conference. So that's why we're excited
Wonderful.
to have him ahead of their conference. So learn a little bit before and then go to the conference.
Yeah, excellent. Yeah, and everyone go ahead and get registered for Chicago, the Neighborhood Economics Conference if you can. Make sure you subscribe to the Main Street Journal. Check everything out on Impact Alpha. And until next week, remember, we are each other.
Thanks so much,
Bye-bye now.
everyone.